Go to our featured guest of the morning for her insight. She's Brianne Gardner, Senior Wealth Manager at Velocity Investment Partners, Raymond James. Great to have you back in the studio.
Yeah, thanks for having me, Paul.
So the takeaway from these numbers obviously will be what it means to the Bank of Canada. Yesterday, Governor Tiff Macklem said that while there is evidence that the earlier rate hikes are doing their job, he said, I think as he was expected to say, the bank, don't assume that the bank is finished yet. The bank is willing to hike again. How do you think these numbers will be interpreted if they come in line with expectations?
Yeah, I think we saw July, Canada shed 6,400 jobs and employment, go up to 5.5. So if everything plays out, I think it will be crucial for the Bank of Canada. At this point, our thoughts are, right now, if Canada does decide to do another hike, we think that would be the wrong decision. Mm-hmm. And that would really be the government helping to cause additional inflation, which we think would be, the wrong decision going forward, not only for the Canadian economy, but for consumers as well. So I think they are in a little bit of a tight situation. I think the language that they're using has to be tactical to a little bit scare consumers, mm-hmm. telling them, we could do additional hikes. But I think from, the economic data we are seeing out of Canada is showing, signs of weakening, signs of cracks in the economy, which is a little bit, alarming to some people for sure.
Here's a look again at what economists are expecting. Bloomberg News, of course, polls economists in advance of every major economic release. Here's what economists are expecting to hear today. 20,000 new jobs added to the Canadian economy in August. These are expectations, not the reality. The reality will be with us in 23 minutes from now. The unemployment rate expected to tick up to 5.6%. That's up from 5.5% in July. And wage growth to come in at on an annualized pace at 4.7%, down from 5% even in July. And TD Bank, when it previews these numbers, says that softer wage growth should give the report a dovish tone. And I'm wondering if you agree, Brianne, that the key number may be that wage growth number. And if it does decelerate, as economists are expecting, that may set the table for the Bank of Canada to stand pat.
Yeah, I definitely would agree. And I think that, it should be more of a dovish messaging that we'll see. I think it is, the market is also driven a lot by data-dependent information as it comes out, right? And the market is reacting to good news and bad news. So I do think it is crucial to see how Canada is, is our unemployment going to keep on this path? Does Bank of Canada need to step in again? Or should we kind of wait and see all of these hikes that Bank of Canada has done, over the past 12, 15 months to see how they are going to be impacting the economy, because it does take time for those interest rates to flow through the economy, and we haven't really seen that full impact. Even if I think of both Canada and the U.S., inflation is cooling. We are starting to see cracks in the labor market, which everyone is watching closely. And I do think that, the market's starting to get a little bit volatile, overbought in certain areas. So to us, that is showing, we are headed into seasonally weaker September. I think investors should be a little bit cautious here, and more economic data that comes out, I think that could either send us a little bit higher in the stock market, or we could see some more volatile headed into the fall.
That's Brianne.